There's this one chart that has signaled strong moves for Bitcoin for the last 3 cycles every time it went above the 200-day SMA, and it is flashing again. We're going to talk about this. We're going to talk about how probabilities are increasing for a possible rate hike in 29th of July, news regarding geopolitics between America and Iran, price action on Brent crude recently hitting the 50% Fibonacci level, and a lot more news regarding the Clarity Act, Russia passing a digital currency bill, and price action against some of our favorite altcoins such as Ondo and the newcomer Chainlink. So all of this and more for today's video. Tune in. Hello everyone and welcome to Strategic Markets, your place for technical and fundamental analysis all at once across many markets. And today, diving into our session immediately, we're going to talk about one asset that obviously impacts global markets all around, and that is oil. You can see that oil from the last time that we spoke, from the $120 to the $70 low that we had recently in June. If you draw that Fibonacci out, you can see our 50% level sits at $95. And I am sad to say that we have actually touched that particular level. Even the 100-day SMA is currently sitting around that particular price target too. So my thoughts on this are, if there is no negotiations or if there is no surrender from any side, which looks fairly doubtful, oil can keep going higher up. And the moment we break through this 50% level, guys, is the moment that we really need to start considering strain on markets all across. What is it looking like from a news perspective? Well, Iran has officially begun meetings with mediators in Pakistan on Tuesday. So that was considered to be good for the markets. But then what happened? President Trump said that US has no interest in meeting with Iran negotiations. Now, that could obviously be a strong arming tactic. But in this particular case, currently there are other countries and leaders getting involved. If we have a look over here, you can see that Trump basically warned North Korea to stop sending support and weapons to Tehran. In response, North Korea basically said that they're not only planning on supporting Iran, but they're also standing with Iran and will continue to do so. So they'll send basically all of their advanced military technology across from North Korea to Iran, and then Trump basically replied and said, no need to respond with words. If you have the courage, step onto the battlefield. So I'm not saying a World War III instance is occurring in this particular case, but you can definitely see this is how allies get built and how things progress further. So we are in heated discussions right now, and that's definitely something to be across. When we look at the Strait of Hormuz tracker, we can see over here that in the last 24 hours, we have had 14 ships transit through the Strait of Hormuz, which is not that much. So obviously there's only limited movement happening over there. Now, how is this affecting the next rate cut, the next Fed rate meeting that we're going to have on the 29th of July? Well, last week we were looking at about a 13% chance of a rate hike. That has slowly moved up to 27.3. Now, I still believe that it is unlikely that we're going to have a rate hike based on this particular current events, but you can see that people are starting to price this probability particularly in. So it'll be really keen to monitor because, yes, this is where the lever is slowly going higher and situations are getting tense. Now, how is this affecting the S&P 500? You can see over here, we're still in this particular triangular pattern ranging sideways. So there hasn't been much going on with this particular type of price action. Russell as well is just lingering at the $3,000 level because it's just currently doesn't have the liquidity to go further, and also the psychological barrier is not currently breaking through. But the interesting thing is it's at least not going down to test this 2800 prior resistance but now support level over here. Unless it does, my theory that why it's currently testing this particular resistance and possibly could even break through is because copper versus gold is signaling some good strength. Now, if you look over here, copper versus gold, in the last instances that it has had moves, if I align it, in 2016, copper versus gold broke out. But At that time, we did not have a 200-week SMA. So I plotted it somewhere around here if the SMA would have continued somewhere like this. Bitcoin had a bit of delayed price action and it started moving in about August of 2017 all the way up to December of 2017. All right, so that correlated. Similarly over here, now copper versus gold definitively broke above the 200-week SMA in 23rd of November 2020. November 2020 was a very strong month for Bitcoin, and altcoins rallied very similarly around that particular period too. Now, again, what is happening over here? Copper versus gold, if I zoom in right now, is actually breaking above the 200-week SMA, possibly testing it for support right now, but definitively on the week it has broken above it and is staying above it as of now. If this stays above and continues to move up, you're seeing that the Russell is currently just staying under 3,000 as well. This is going to be really good for risk on assets, and risk on assets, particularly speaking, Bitcoin as well. Now, I personally do see a strong and beautiful future for Bitcoin as well. But just as we saw, copper versus gold in the short term was having a bit of a retracement. And on this particular aspect, Bitcoin is currently forming a pattern too, and it's got two ways to go, up or down. Now, in this particular case, this is a rising. I know that sounds pretty ironic. This is
up or down, up or down.
Markets can go sideways, guys. But all right, so let's say this price action has a definitive move and it can go up or down. Well, a rising wedge pattern on a majority basis does have a downwards move price action. I believe it's 60% down and 40% up. Don't quote me on that, but yeah, that's generally the stats and facts regarding a rising wedge pattern. What are some supporting theses that this can go down in the short term is the fact of our Bitcoin exchange liquidation map. So right now, in terms of long liquidations versus short liquidations, longs is currently at 10.16 billion, whereas our short liquidations is nowhere close. It's just at about 1.88 billion. So that is a little bit of a struggle. Now, as we follow through with this Bitcoin liquidation map, you might be thinking, well, what might be some of the catalysts that actually moves the price of Bitcoin upwards? Well, that would possibly have a lot to do with the Clarity Act, because this week we actually had some really supporting news for crypto. The White House has reportedly agreed on an ethics package for the Clarity Act. So basically, the Democrats in the Senate were saying that unless there was an ethics clause that did not allow any of the Congress members to profit from crypto activities or just basically doing insider trading on crypto, then they would basically go ahead and vote for the Clarity Act. And Trump was actually not for this particular clause for a very long time, until very recently, where he has decided to support that particular ethics package and proceed ahead with the Clarity Act to get Democrat support. And why do you think that might be? Because there's a large population in America that actually holds crypto. It is actually said that, more people hold cryptocurrencies than people who have dogs. So that's an interesting way of remembering that particular stat and how much majority there is in crypto for the US. So if Trump says, I was one of the people who got Clarity Act passed for America, then in that case, that could work very well for him in the midterm elections, right? So that could be...
Is that seriously a stat?
Sorry?
Really?
Yeah,
Is that seriously a stat?
That is legitimately a stat. There are more crypto holders than dog owners in America. So look that up in your own time. But that is one thing that could move the price up. And I have seen it in the past that we do have long positions set up before a market moves up. And that could just generally be that smart money is positioning their positions before the market moves up because they know something we don't. So keep that in mind, that the market doesn't always have to go down when long positions are put up at a higher ratio. But on that, what are some other countries that are passing crypto legislation? You actually will not believe this, but Russia's parliament has passed a digital currency and digital rights law regulating crypto exchanges, brokers, and basically all across crypto native companies. So they are moving ahead with rules. And let's have a look at this. So we've discussed Russia. We know Japan has recently passed laws. We know Taiwan has recently passed laws, and we covered that in this particular channel. Even countries like Poland are passing laws. It's just that their president just continues to veto those particular frameworks. But a lot of countries are making effort to pass cryptocurrency laws. It's really hilarious how America is now not even second or third, but nearly coming fourth in line to get these kind of acts done. So what is this type of news doing to our favorite altcoin, Ethereum? Well, Ethereum is actually doing something very interesting, and I've been covering and hoping that it comes back into this particular sideways triangle range, but it's actually been doing pretty good. In my opinion, it can actually move to $2,000 in the not so near future to test this 20-week SMA. So when it goes to do that, that'll be a really interesting move because this is actually following along with Ethereum's Bitcoin price action as well, the ETH BTC ratio, and Ethereum is actually showing strong strength against Bitcoin. So if this continues to move up, you're not only going to see ETH USD likely have strength, but you're definitely going to see ETH BTC showing strength and also confidence in altcoins returning. And I'm actually very excited to cover this because Ondo Finance, which is a token we all know if you've been along with this channel for a while that I've been following, actually recently broke out of this bull flag price action and is heading onwards. Now, if the volume continues and this price action particularly goes up, then in that case, we could have a move to a 55 cents Ondo. Now, I personally do have take profit set at 50 cents. I'm happy to get out of my position then. I've got like a half profit position to just take at about 42 cents. So I'm not far off from that. But yeah, funnily enough, when we were coming at this particular stage and I saw movement in Clarity Act, I actually did set up my position over there. So that was a little bit of a fundamental and technical analysis move from there onwards. But see how you guys go with tracking altcoins because you still have opportunity. When you look at altcoins such as Link, which are all down in the dumps, but they are having partnerships with the DTCC, which is a clearing agencies for international transactions across the world. They're basically providing real-time data for many crypto projects. So you can do research on that. And then you also have tokens such as Hype. So Hyperliquid is basically a exchange that operates as a DeFi platform, and you can do leverage trading on that. And just since January till now, it's just moved 243%. So recently its price action has been down because it has moved up so much, similar to like Micron Tech and your AI assets. But this particular crypto asset just did not have a bear market at all, and it just kept moving up. So you do have assets that have performed really well, and you're slowly starting to see that assets with good fundamentals are actually moving up with the markets as well, especially when risk on indicators such as copper versus gold start showing strength as well. So you really got to ask yourself, just like I can position myself on a trade for Ondo, is there look at the places of opportunity that you want to see before you make a move, or do you want further confirmations? And that's a call that you can personally make. But I'll leave you on that today for fundamental and my side of technicals, and we'll pass it over to Steve to see what he sees on his side.
Beautiful. Okay. Thank you very much for that, Yash. And you've really said it quite well as you were ending that presentation in terms of having a look and seeing there's going to be a market somewhere that you can actually have a look at and basically see that there's something to take advantage of one way or another. For yourself personally, you were really seeing that in particular in relation to Ondo, having a look also at Chainlink, and we'll have a look at those a little bit later on as well too. But overall, and it brings it back to some particular analysts as the way they always say it, there's a bull market somewhere, anywhere, and you can find it in some way or another. And that could be looking at one particular area in terms of, say, like cryptos in particular in one way right now in terms of certain altcoins, or it could also be in terms of, say, look, an inverse ETF or something on those lines. There'll be one asset, one instrument, there'll be something or another, there'll be something that'll be moving. At this point in time, you can obviously see it right now with one of the charts we're looking at on the screen right now being Brent Crude. So right now we actually are seeing the definite phase of Brent Crude itself having come out of the down phase and then going into the up phase. And you can really see the changes that go on with that. Now, we were talking last week in particular as to whether or not this particular instrument in terms of Brent Crude was going to actually test this $90 or $90 area, or as Yash was actually referring to in terms of the $89.60 area, being that Fibonacci area, as to whether or not that was going to be a resistance area in itself. It literally just shot right through it. So overall, that's not really a resistance area as such anymore. But now we're actually testing another area overall. And that area there is now the $95 area, which is literally the high of this particular candle that we're looking at in terms of the candle from today. So whether or not now we actually get stuck at the 95 level, come back a little there, test that, and then shoot off through that. So it's a matter of just basically testing, seeing, and whether or not we actually pull back from these areas and go forward from there. If we go across to US, you can really see that it actually just shot right through the 50-day moving average, being the blue line, and went right past through it. And it's just not looking like it's actually going to be stopping at all. You can even see in the pre-market, in terms of when the market's going to be opening up shortly, we're currently at 8:40 a.m. before the actual market opens on Wednesday morning over in New York. It's going to be opening in just about an hour's time. Pre-market, it's actually going to be opening at $131, just shy of $132. It's actually going to be opening up here where this orange line is. So well above the 50-day moving average. So when we were talking about things at the end of last week, we were actually just sitting above this white line being the 100-day moving average and well below the 50-day moving average being the blue line. We've shot past that on Tuesday, and we're going to be well past that now, being on Wednesday. Now, being well above that, and then essentially maybe coming back down, testing this perhaps, or is it just going to keep on going up, being this gap continuation? We'll wait and see. But either way, we're now well above that 50-day moving average, and it's just a matter of now seeing what it basically does from here. But looking at the lagging indicator now for USO, this will now more than likely pass well above the unit prices, as you can see from here, and it will more than likely also pass by that Tenkan Sen blue line as well too, to really show the strength coming through. So we're merging the right-hand side, essentially being all the moving averages, with the left-hand side being the Ichimoku curve for further confirmation as to exactly what's going on in terms of the strength. So that's Brent, Crude, and USO covered in relation to what's going on there. If we take a look at, say, the volatility of the markets, volatility's been going up and down, up and down, up and down, a little bit crazy as to what's going on overall. Where will this be in relation to how the markets are going overall in the future? Well, it's a little hard to tell. But overall, we are basically now going above the short-term moving averages in relation to volatility. So we can probably expect that this volatility is going to rise, especially if the indices are going to be declining. So let's have a look and see what's going on with the indices overall. Because really, over the last few days, the indices haven't really been doing all that much. Essentially, we've actually been slipping beneath the short-term moving averages and testing this 50-day moving average, especially when it comes to the SPY. It looks as though, in terms of the SPY, we're actually going to have a bit of a down day today, because we actually are having this pre-market now going to 746 compared to where it actually closed yesterday at 748. So we're actually going to drop a couple of points at the start of today's trade. So overall, it looks like we're going to be coming down to about here, which will be below that 50-day moving average. When it comes to the technology stocks, in terms of the Qs, similar situation in terms of dropping some points down there as well. And we're already well below the short-term moving averages there as well. Let's have a look at the Dow. When it comes to the Dow, we'll look at the diamonds to see where it's going to open as well. That looks like that's going to be opening below the short-term moving averages as well. So you can already see there. But that's not anywhere near the 50-day moving averages yet. So we've got a bit more strength in the Dow compared to, say, the SPY and the Qs at this stage. We go across to the Russell. The Russell, a bit more strength there as well compared to the SPY and the Qs. So in terms of the Russell being the small caps, we've got more strength there in the small caps, as well as the large caps being the Dow compared to the SPY and the Qs at this point in time. That brings me on to a very, very interesting point here at this moment, and that's in relation to the bonds. Now, the bonds themselves are extremely weak at this point in time. We can really see that here with this chart. And you can see we are basically forming lows upon lows upon lows, even though we had this spike up here on Friday at the end of last week. And I was mentioning this at the end of last week's video, because even though we had this spike, it was still testing the quarterly VWAP being that pink line, as well as the 15-day moving average there. That's the 15-day EMA. Even though we were testing those and we formed this higher high compared to this higher high over here, because it actually had closed below those moving averages and the VWAP, this was still showing a fair amount of weakness because we weren't able to actually sustain a close above those lines. And that in itself is definitely indicating some weakness. And it's now confirmed that weakness by forming this lower low. And we're starting to really, really see a lot more weakness here with these bonds. And what is this really indicating though? The more weakness that we're seeing in these bonds, the more chances of rate hikes. And What did Yash mention before? A higher incidence or a higher likelihood of rate hikes coming through in July. And that's being reflected as well in relation to increased incidence or increased rates in itself in terms of the 10-year yield. And you're really seeing that here as we're actually extending further and further above these short-term moving averages here with the yields. So it's getting very, very interesting in terms of the picture here. And that's really, really being seen in the yields themselves. On top of that as well, we're actually starting to see the dollar starting to creep back upwards as well. And for those who are following along with the channel, we've actually been talking about this quite a lot in terms of the dollar being very, very stubborn for quite some time. Every time it seems to bounce down around here, this level here, we seem to be bouncing up and up and up and up, and it's not stopping. The dollar is remaining extremely stubborn. And every time that dollar keeps on going upwards, this is tending to suggest that people are still becoming very, very averse in relation to this market at this point in time. So really keep all of these kind of things in mind. And this might actually be showing the reason why this market could be rolling over more and more as time goes on. So really, really a lot of things to keep in mind in terms of all of these factors. So let's cover quite a lot of the markets overall in terms of the overall general scheme of what's going on. And maybe that could also be explaining why we're starting to see potential for a little bit more people to be going towards some of these safer assets perhaps in terms of going back into the precious metals again. Now you might be looking at this chart here and going, is that really the case? Well, to tell you the truth, it looks as though it might be the case because we're starting to see a little bit of higher highs potentially forming the lagging indicator when it comes to gold here. And it may actually be starting to actually form some higher highs even in the unit price here. So let's have a look and see how this does form. I'm not actually 100% convinced of this yet, but these unit prices may actually be starting to actually break out a little bit on the higher high side when it comes to gold here, because we're starting to actually form a little bit above the quarterly VWAP here and above the short-term moving averages here for gold. So keep an eye on this as well too. And the same can be said for silver. Not as strong as gold at this point, but it looks as though gold may actually be starting to have a bit more relative strength compared to silver. And that has actually changed a little bit in recent times because silver actually started to get a little bit more weaker here over the last week or so. So we may be having a bit of a tag team changeover a little bit there. Now, in terms of copper, Yash was talking about this before as well too. Copper versus gold, a little bit more strength coming into this again as well too. And you can really see it here with this chart as well, especially over the last couple of days. Copper in particular, really starting to bounce away from the short-term moving averages and really starting to gain some strength in relation to things here. And that could be really, really a telling tale. Recently, we were talking about iron ore gaining some strength. That looks like that's actually slipping away again. So we're really seeing a lot of rotation going on in these markets overall. And that's a really, really important thing to keep in mind. So we may be starting to lose a little bit of traction in terms of mining once again as well. Bitcoin looks as though we're starting to get a little bit more strength into that again. And we were talking about this on the weekend as well, especially with a bit more support above the April 2021 level. And we are really, really starting to actually start seeing a little bit more here. Whether it holds above this October 21 level, let's have a look and see. We are testing this at this point in time. The lagging indicator is also indicating that as well too, in terms of dipping down beneath that October 21 level as well. So another area to observe. Now Yash pointed this out very, very nicely in terms of Ethereum having more strength compared to Bitcoin. And you can see that that situation is the case as well. Keep an eye on this one overall too, because we are testing this 100-day moving average being the white line that is still declining. And on top of that as well, we haven't broken above this cloud, the top of the cloud as yet. So once we do, then we'd really see that there is a bit more strength here, especially with Ethereum as well. So that's quite interesting. Ondo overall, you can really see the strength coming through on this one. It's a very, very good one there and well picked there by Yash as well. It could be a little bit overextended in the short term. It's really, really high up away from the short-term moving averages. There's no doubt about that at all. Take a look at that lagging indicator. It's really broken up above the cloud. It's broken up above both the Tenkan Sen and the baseline as well. A really, really huge amount of strength coming through on that without a shadow of a doubt. Now, Chainlink was the other one that Yash had mentioned as well too. We could see some short-term resistance coming through on this in the very, very short term because it's coming up against the 100-day moving average and the 150-day moving average being the yellow and orange lines respectively. But the lagging indicators are looking quite good in relation to this. Higher highs and higher lows at this stage here as well. It is stuck right in the middle of the cloud at this point in time. However, we do have a good trend overall at the present time, considering we have the Tenkan Sen above the baseline very, very decently at this point in time for the last couple of weeks. So Chainlink is looking pretty decent at this moment as well. Another one to keep an eye on as well is Tron. This one here that I've been keeping an eye on overall myself is looking fairly decent. The reason being in saying that is it's all above the quarterly VWAP, the short-term moving averages there as well, forming some reasonably trending situations there. Still below the 100-day moving average at this point, but as you can see, higher highs and higher lows forming in the lagging indicator, and the lagging indicator is just broken up above the 10th and sen back here, and also above the baseline just over the last day. And it's also just broken through the cloud over the last couple of days as well. So another one to keep an eye on in terms of some potential for further movement to the upside here as well. So that's another one to observe. So we can really see quite a lot of movement all the way around. And that really brings me back to the point that I was making right at the beginning in relation to the fact that there's always something moving in a positive direction one way or another, be it an actual individual instrument itself or maybe even an inverse ETF or something along those lines. It's just a matter of finding something that actually does have some movement. But at the same time, there is always something as well that will always be remaining stagnant. So, you might find for every one instrument that's going positively in one way, there'll be something going negatively, and there'll always be something that'll be sitting there doing absolutely nada. So it's just a matter of being patient sometimes, or just being along the lines of being cautious at times as well too. But above all, keep an eye on things, keep an eye on levels, and keep an eye on how things are going in terms of the favorite indicators that you like to use as well. And hopefully, in terms of the way that we're looking at things too, you can see certain things that we look at that you might like to take a look at in some ways for yourself and have a look and say, okay, well, hey, I don't mind looking at it myself that way as well too. But with that, I'll pass you over to Yash, and be sure to bid Yash a little farewell as well. He's going to be heading off and enjoying about a week and a half of well-earned holiday vacation break time, and you'll have the pleasure of my company for a little bit of time there as well. And don't go crying too much over that in the short term. But I'll pass you over to Yash for the concluding remarks on this particular video for now.
Thank you so much for that, Steve. Yes, I do need a little bit of a break, guys. I'm going off to Bali, so I'm a little bit excited for that. But with that being said, well, I've had a great time with you all. Thank you so much for everyone who gives us the support, a like along the way, and that truly goes a long way for us. So if you can drop one today, that would be great. If there's anything you would like us to do differently or you would like for us to cover something, drop a comment and we'll be sure to get to you. Today, let's put in the chat copper versus gold blast off. Put that in the chat and then, we can just get excited for that as it pushes the rest of the risk markets up. And if you've been enjoying the journey, a subscribe also just goes a long way so you can keep up with what we are putting out there. But on that, thank you so much for joining us today. I won't be here for the next 3 episodes, but I'll be back after that. Steven's going to take care of you guys and keep you across all technical changes that are happening.
And let's not forget to thank Mark as well for his ongoing support, which is absolutely amazing as always. And we will catch up with you once again, or I will catch up with you anyway on the weekend. In the meantime, have a great week, everyone.
Thank you so much, Mark. Have a great weekend, everyone.
Enjoy your holiday, buddy.